So taking a look at section 13.2, this truly is the hardest part of this chapter. So what we have is we have 4 employer taxes that have to be paid. We have Social Security, Medicare, federal unemployment, and state unemployment. In order to go through and complete this, you have to understand what is called the tax base. The tax base is a number set by the government that says once an employee has earned over a certain amount of money, you no longer have to pay that tax. Now, we know that the tax base for Social Security and Medicare for our book was $106,800. Again, it's set by the government, but for our textbook, that's what they said. Now, once an employee earns more than that, we don't have to take out any taxes for them for Social Security and Medicare. Now, we have the same thing for 2 of our employer taxes. So when we take a look at our federal unemployment and our state unemployment, we have what is called a $7,000 tax base. Once an employee earns more than that, that means the employer no longer has to pay federal or state taxes for unemployment on them. So we have to go through and we take each person's earnings, we take a look at what it takes to get to that $7,000 earnings, and then see whether or not we have to calculate how much we have to pay taxes on. So for example, if I have an employee that prior to this paycheck had earned $6,800, his next paycheck is $500. I don't pay taxes on that full $500. I'm only going to pay taxes on $200 of it. So we pay right up to that $7,000 tax base. So let's take a look at this employee by employee. So Nick Ellis, prior accumulated earnings to this pay period, had earned $6,100. This column right here is basically telling you the difference between our tax base of $7,000 and what they've earned is $900. Okay, so they've done a little bit of math for us, so that we can pay tax. We have to pay taxes on Nick for federal and state for $900 more, and then we stop. Nick's current pay period earnings was $762.50. $762.50 is less than $900. So the total earnings that we are going to have to pay taxes on is going to be $762.50. Now, when we take a look at Evan's earnings right here is $7,980. That's more than $7,000. Look at right here. Earnings to equal the federal unemployment tax base is 0. And SUTA tax base. So the total amount of earnings for his pay period is $1,040. How much earnings are going to be taxed for our unemployment? 0. Virginia has earned $4,380. She is $2,620 away from that tax base, and her current earnings is $527. $527 is less than $2,600, so we're going to pay taxes on her total earnings of $527. Now Carrie, this is where we get to do some math. So we take a look at Carrie has earned $6,850. She only has $150 up to that $7,000 tax base for our unemployment taxes. Her current earnings is $849.50. Which one's less? It's the 150. So the only thing that we're going to pay taxes on for Carrie for federal and state unemployment is going to be $150. So when they have this table set up, we take a look at what is less and use that one. Now we just got to break out our handy dandy little calculator here, and I'm going to add up the total earnings for the pay period. So I'm going to take $762.50 plus $1,040 plus $527 plus $849.50, and that will be $3,179. Now I'm going to take a look at the next one, $762.50 plus $527 plus $150. $1,439.50. What these totals give me is this column right here is the total earnings for the pay period, and this gives me the total earnings that are taxable for my federal and state taxes. So we'll go ahead and move on. We did well on that one. We'll do our next step, part 2. We'll go ahead and calculate our payroll. Now, when we take a look at down here, we have this table set up. We have 4 taxes an employer must pay: Social Security, Medicare, unemployment federal, and unemployment state. And you will notice they gave us those percentages right after the type of tax. Now, Social Security and Medicare tax has a tax base of $106,800. None of these employees have reached that tax base. So what does that mean? All of their earnings are going to be taxable for our employer taxes. So I have to take this number right here in my calculator, $3,179, and I'm going to multiply that by 0.062, which is right here. I'm going to hit equals. So my Social Security tax is $197 and 10 cents. And not 1 cent, it's supposed to be 10. I'm going to double check my math on that one. 3,179. Yep, $197.10. Now I'm going to use that same number, 3,179, and I'm going to multiply that by 0.0145, which is my Medicare tax payable. And this number should always be smaller than my Social Security tax. And that's going to be $46.10 as well. Now, for our federal and state unemployment, we don't use this $3,000 number. We're going to use this $1,439. So I'm going to put in the calculator 1,439 times 50 cents. Now, big problem that students have is they see that this percent is 0.8 and then they just put it in the calculator as 0.8. But notice it's 0.8%. So if I'm going to put this in as a decimal, I'm going to put in 0.0, oops, I have to hit multiply first, 0.008, and then hit equals. This should be a really small number, and I'm going to put this in there as $11.52. Okay, and again, I'm just going to double check my math. 1,439 times 50 cents times 0.008, $11.52. I'm going to do the same thing for my state unemployment tax. That tax percent is 5.4%, so I'll put in the calculator as 0.054, and that will give me $77.73. So again, I take the percent and then I multiply it by their earnings, and I have one number for earnings for Social Security and Medicare, and I have a different number for my unemployment taxes because of the different tax base number. So what I need to do right now is I need to add these up. And I get a total of $332.45. Now that number is really important. This is the amount of taxes an employer has to pay just because they have employees. So when we go through and do the whole payroll process, we go through and calculate how much we have to pay employees. We put it on the payroll register, and then we will go through and we will journalize that into our cash payments journal. Then the next step is we have to calculate our 4 payroll taxes. Again, these are just expenses that an employer has because they have employees. Now, it cost us $332.45 because we have employees on top of what it cost us to actually pay our employees. So the next step is, once we have these numbers, is we got to go through and journalize it. So when we journalize this number, we're going to go ahead and this is going to go in our general journal because it's going to be journalized with a source document of an M. Okay, so typically what you will find is you will have a payroll register and they'll say journalize the payment of employees with check 700, and you put that in your cash payments journal. Then the next transaction will read journalize the employer taxes for May 15th of the current year's, use memorandum 46, for example. And they won't always give you these numbers, but you can get these numbers by going through and doing those calculations that we did in step 2. So to put this into a journal, you will see that I have Social Security tax, Medicare, unemployment federal, unemployment state, and payroll taxes. It's truly going to take me 5 lines to journalize it. So I'm going to have 1 debit and I'm going to have 4 credits, because all of these liability accounts are going to need to be credited, because we are just journalizing the fact that we owe it. We know that we have to go through and pay our taxes either quarterly or monthly, depending on how big our business is for having employees. We'll take a look at those sections coming up in this chapter, but they'll either be told that they're a monthly scheduled depositor or a quarterly scheduled depositor, and we are going to need to pay that to the government. So let's get this transaction recorded. Let's go ahead and put this on there as of May 15th. Now we have to list our debit first, and our debit is going to be payroll taxes expense. Source document is M46, and that is going to be debited for $332.45. And again, that's this one right here. So my account title is payroll taxes expense. Now I'm going to start at the top, and I'm going to do Social Security tax payable first. Medicare, next. Now I'm going to put in my 2 unemployments. It's unemployment tax payable federal and unemployment tax payable state. And you will notice that MindTap, when we put a number in the credit column, it automatically takes that account title and indents it a little bit. So I took this information, which we calculated in step 2, and now put it into my general journal. I have 1 debit and I have 4 credits going through and recording our employer taxes. So always remember there are 4 taxes. That's the biggest thing I try to get students to remember out of this chapter right here. 4 taxes an employer pays: Social Security, Medicare, federal unemployment, state unemployment. Remember that employees also pay Social Security and Medicare. So Social Security and Medicare are going to be considered matching taxes for an employer. Whatever an employee puts in, an employer also has to put in. But employees themselves do not have to pay anything out of their own pocket for the unemployment taxes. That it's just going to be something that an employer does. So this section can get a little hard. Just go through and take a look at remembering your tax base for your federal and your state unemployment taxes. Will help you to make sure you calculate that number correctly. I'm going to go ahead and click on that grade final step for this work together. And I put in a wrong number. I put in 1152 and it's supposed to be 4610. Not very smart, Mrs. Grasso. I hope you did a better job on that one. Hope you guys have a great day, and I look forward to seeing you guys again soon.